I'm Osborne Foreman, and in this video I'm going to show you the UK stocks that I bought this month, as well as the top risers and divers in the portfolio. And if you like the video, please drop one of these, support the channel as I am slightly hungover. According to Google Finance, the FTSE 100 is down 1.15%. The FTSE 250 is also down 0.67%, and the S&P 500 is ever so slightly up by 0.026%. My portfolio is down 1.54%, meaning that I have yet again underperformed the benchmarks or indexes. However, this is of no concern to me, and the look at the sheer volatility that the portfolio had experienced in the last week was pretty incredible, and in fact it really could have ended much better or far worse. So it is interesting to see that it did almost level off, especially because Freetrade's uncrossed trades on the London Stock Exchange are not up to date over weekends, and so the likes of Argo Blockchain, where it says that it closed at £1.58 per share, at least according to Google Finance, it's around 1.65, so there are some inaccuracies in this data. At one point in the week, I had nearly but almost quite recovered all of my losses. Another point in the week, I'd gone to the lowest that I had been in a long time in terms of raw capital gains. So it is quite exciting, at least, to watch as the portfolio does experience this high volatility. And this was fueled by most of my positions, but namely the top three. But in fact, this week has taught me one of the most valuable lessons that I've come to learn in the stock markets so far. This is because I was never here for the pandemic market crash. Any investments I had beforehand were a global diversified all-world index fund, and I actually managed to sell prior to the March dip as I was transferring that ISA into the Freetrade ISA that I created in April 2020. This meant that I did get lucky and I missed out on these dips. And so prior to the likes of Argo Blockchain, I hadn't actually had a stock that had dropped by more than 5 to 10%. Yet now I've had experiences of at least downwards of 40%. This is a great time to test conviction. I believe conviction is based on the idea of the more research you have in the company, the better, or the more you know the company, it means you are more likely to make a more informed decision on whether to buy or sell a dip in the markets. And so, in my opinion, I saw Argo Blockchain drop by 35% below my average price, and I felt that it was a good time to top up. There were no fundamental changes to the intrinsic value of the business. In fact, the only change would have been the drop in Bitcoin, which I felt was fair. And usually the Bitcoin miners, if Bitcoin drops by 10%, those miners would drop by further than that, as their future expected earnings and revenue is based off of the price of Bitcoin. And so if the future outlook for Bitcoin looks grim, it's going to look even more grim for these Bitcoin miners. And this week it presented that opportunity to buy the dip. And it also showed for a very brief moment that because I had bought the dip, I was at that time period rewarded for it. Of course, this stock could more than likely continue to fall, and so I've not truly seen the rewards of it, but I had a glimpse of that, and that glimpse was the idea that yes, it could recover just as quick as it had fallen, and that at that time period, I was perhaps correct to have bought more, as it really did push up the returns of the portfolio, although since has dropped. But Argo Blockchain did drop alongside the industry. There were no news items behind a meaning for this drop, and so I thought that this was quite illogical. And don't get me wrong, there's not always logic in the markets, and that can drive some people mad. But I felt that because there was no news in the business, and the business was in a fantastic position, I felt it was only right to buy more. Perhaps individuals were recalibrating their positions in their own portfolios. Perhaps they decided that they wanted to diversify out of crypto, and that meant the likes of the cryptocurrency miners had seen sell-offs. These sell-offs might have accelerated as they triggered stop losses, meaning that overall this created more volatility and a further dip. And in my honest opinion, I took this chance or opportunity to continue buying to lower my average price. Although in order to do this did involve selling another position that I will talk about later in the video. This week we did get an RNS update, which is a regulatory news service which is on the London Stock Exchange. And we had this update on the Texas mining facility, where previously they had mentioned that they could generate some of the cheapest electricity rates in the world, meaning they could be a very efficient place for cryptocurrency mining. And that they did have in store plans for a 200 megawatt mining facility. Well, in this RNS update, they had confirmed that they now had a contract with, I believe, and I'm not sure of the name of it, Navia, and this contract would allow them to get started building this. Although there's further speculation on this whole matter, and I want to dive a little bit into it. The first bit of the speculation I think is a bit ridiculous, and I feel that this is people really clutching at straws, but I feel that it's worth mentioning as it could certainly be the case, and right now I could be being very much ignorant. And that is due to a tweet that the CEO of Argo Blockchain had made about, he was responding about the football team as they did have prints on whatever. He said, maybe, right? That's it. Yet from this, people inferred that because he drew out the length of the May to the B, that perhaps the NASDAQ listing was due to finish in May. I don't think this is the case, but I can see why some individuals may believe so. However, there was another piece of speculation that I feel actually I could agree with, and I think is very much valid without obviously falling for the people ramping or trying to push this stock up. This is the idea that they've bought the land in Texas and it's named Helios. Helios is the Greek god of the sun. One could infer that in order to generate the cheapest electricity rates in the world, they would likely be using a form of renewable energy such as solar power, as we've got Helios, the god of sun. Furthermore, this may mean that in order to get these cheapest rates, they may themselves buy a solar facility so that they're no longer paying money to these electricity companies or whoever runs it, and in fact could possibly mean that they could increase their margins further, as at that point they would only be paying the prices for upkeep and whatever employees they may have at that solar factory. And so they may, and please listen to what I'm saying, they may, that's why I'm saying may because this is speculation, but they might, just might, buy a solar facility, and that may be another positive impact on the share price over the longer term. And this would certainly put them in a better competitive position to their peers in the industry, and furthermore increase that perhaps valuation batch up when they get listed in the NASDAQ and how much they do get truly valued at. Bitcoin continued to decline, and I have little to no concern over it. As I've said before, I don't truly believe in long-term Bitcoin, but I'm open to the ideas, and I'm starting to understand why perhaps developed nations will be more interested in it than some young lad in the UK that perhaps has no need for these currencies. And in fact, the correction in Bitcoin proved that Argo Blockchain was very much resilient. The share price didn't drop by too much, perhaps because they already had dropped by a fair amount. So it might have already been priced in subsequently, but it was interesting to see that resilience, especially with ARBKF, the OTCQX listing in the US, actually make a full recovery by the close. And since Bitcoin has pretty much held its value for the most part despite a 20% correction, I feel that this was the time to buy, and so I bought an additional 493 shares of Argo Blockchain, bringing my total position size to 2,718 shares. At this point, I'm not entirely sure if I will continue buying shares. That's not because I'm unconfident on the outlook of the business, in fact it's quite the opposite, but now it's a question of exposure. Do I really want to have a bigger position with Argo Blockchain than my two long-time holds, such as Games Workshop and Boohoo? Do I feel that they deserve that place in my portfolio, and do I want to expose more of my portfolio to that high level of volatility? I may have the risk tolerance for it, but this could still very much be a mistake, and I might be talking where things look promising, we could have some negative news in the future that might mean that I wipe out all of that returns or wipe out the position completely. And this is obviously expecting the worst, but hoping for the best. At that point, would I really want more than 20% of my portfolio allocated to this business? However, as I did mention, I did have to sell a bulk of my other position. And if you're a long-term viewer of the channel, you'll likely already know that this stock is Halma, which, as you can see on the side of the screen, this is using the Freetrade app. And so if you'd like a free share worth up to £200, click the link in the description down below and sign up to Freetrade. I decided that I would continue selling shares of Halma. I sold 16 shares in total, bringing now my remaining holding to 20 shares. Recently, we had seen the recovery of Halma from the lows, and they're back up to near all-time highs. In the past, I've mentioned countless times that I do not feel that they fit with my investment strategy over the longer term, and so I'm very likely to sell this position, but then what I'm going to do is continue watching it. If I see a valuation where I look at Halma and think this is a very quality company and at the moment it's undervalued, then I may look again to enter this position. However, at the moment, I feel this is not the case, and I feel that with a valuation as high as Halma, I could be getting higher revenue and earnings growth for it. But whilst they do have that great dividend track record of at least 5% growth over a 43-year period, I believe, that you're paying the premium for that dividend payment. And at my time in life, I'm not going to be needing to live off of dividend income for at least 10, 15 years. And so I will be likely reducing this position to zero. I may use the remainder of the remaining holding to fuel further Argo blockchain purchases, but I may also leave it. Whatever it is, it will be added to my watch list. And if you'd like to see my entire stock market watch list and live updates on my portfolio activity, including buys or sells, there's a Patreon link in the description down below. Have a click and have a look and tell me what you may think of it. Earlier in this month, I did also buy shares of Team 17 and Games Workshop. Team 17 is one that I believe in, but I've not bought lately as they are now above my average price. I still deem this as a good value in my opinion, and I may be buying more once I see that Argo no longer has sufficient value. At which point then I might be looking to bolster up this position as they have a diverse catalogue of revenue streams based off of multiple indie games in different genres. I feel that this is going to continue being resilient, and even though the pandemic really fueled their growth, I feel that over the longer term, they're going to be a winner. A very similar story for the likes of Games Workshop, in which they have seen a slight recovery from around £95 per share to now around £107 per share. I believe very much in the long-term prospects of this stock. This is a company that has so much intellectual property available that they're more than able to create films, TV series, and certainly could in the much longer term rival the likes of perhaps Marvel, as an example. Whilst I think Marvel has a lot more going for it at the moment, there's certainly potential in the works. The top risers in the portfolio this week were the likes of Team 17, and they had actually gained 3.12%, and no surprises on the next top riser, but it's actually AHT or Ashtead Group. This stock is now up 86% in my portfolio, and honestly, I was so fortunate to stumble across it. It's quite incredible to see how the valuation continues to go up, and it does make me ponder, is this a position that perhaps I should be taking profits on? Is this a sustainable level of valuation? I'm going to stick with my instincts, continue holding as they're a quality company, and at the time of buying them, and I still believe in it, I feel that over the longer term they will continue to dominate and generate high or at least strong revenue growth for their size. And hopefully it might reach the 100% gains area, which would be very much impressive. And I still look for an opportunity to buy into Ashtead Group, as I feel that the time isn't right now, especially now that it's nearly 100% more in the position, as I feel that value recovery stocks are certainly the companies or the the stock investments that are doing very well at the moment over a very well priced in recovery. The top faller this week, in fact, was Boohoo, dropping by 5.41%. When they take up more than 30% of my portfolio, it's quite impressive to see that I only dropped by 1.54%. And so, Boohoo, I am unsure as to why they've dropped, but their earnings are released on May 5th. This, I feel, could be a pivotal moment for the stock. Usually it runs up and then declines. I'm not going to predict anything. I think what I will say is that their revenue and earnings growth is going to be good, and that may be a driver in the share price. Although I'm more interested to hear about their ESG standards, ethical, social, and governance, as that way will be the overall driver of returns in the share price if the ESG funds are able to invest back in after seeing adequate evidence that they are doing everything as possible to monitor their supply chain and ensure that they are paying fair wages. But this is not a stock that I have bought recently, as I took the value when they did dip, and I didn't want to get too overexposed to this position. I did also buy shares of Games Workshop earlier in the month, although this was covered previously in a video when I used to do UK stocks I bought this week. For the same reason as always, they were at a good low valuation and I bought more. Very much similar to the idea that if I take profits on Argo blockchain, it will likely be reinvested into the likes of Games Workshop. If you're interested in my net worth at the age of 21, then click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a fantastic day.